Hey guys, Muscle Ibn here, founder and lead financial coach at OnVisor, and welcome to OnVisor TV. Now today I'm going to cover a bad habit that a lot of investors tend to follow or have, and it also tends to really ruin their investment returns overall. So imagine yourself driving home from work and there are two lanes to get to where you're going. And the lane you're driving into is going a lot slower than the other lane. So the other lane seems to be flowing pretty good. We've all been there. What do? Put the blinker on. We think we're smarter than everybody else. We change lanes only to find out that that lane is just as blocked out and probably has another thing wrong with it that's going to get jammed up. And then you see the cars you were the car you were behind scroll by, leaving you further off behind, and then you get frustrated and you change lanes again, and then you only get home at the same time as you would have otherwise, only you're a lot more frustrated and exhausted from doing all this back and forth. Now investors do the exact same thing. So let's use the example of two investment funds within the same category, right? And the black line in the middle is the category average, right? So for any different investment category, sometimes you have funds that are going to do better than the category average and some that'll be lagging the category average. And, every single fund tends to have some time above the average and sometimes below the average. So if we consider this for a second, what investors do, the bad habit I'm referring to is they will start off by being presented or choosing a champion fund that is overperforming the category, right? So let's call this green fund the champion, the good fund. Well, you follow this for a while, right? Until that fund starts lagging its counterparts. And all of a sudden here, you start getting frustrated with your statements, and maybe your banker tells you that their fund is doing better, maybe your brother-in-law's funds are doing better, or maybe some other advisor is telling you that their fund is doing better. Any advisor can go and say there are other funds that are doing better at this point in time. So what are we wired to do as human beings? We are wired to say, oh, well, the hell with this one. This one's now a loser. I'm going to go and buy this new winner, right? And then, so what we've effectively done is we sold this one at its low point, only to go buy this one at its high point. And last time I checked, sell low, buy high is not a winning investment strategy. So what happens is your investments are here, you're buying this one. Now the trend for this one is likely to turn around and revert to the mean back to the average. And this one running high is likely to kind of start stalling and revert again back from its highs back towards the mean. So if you're here and you switch to this fund and this trajectory is bound to go down, well, you're going to go down with it, right? And then right here, you're going to, the same frustration. And you're going to switch to here because this one's now the champion. And, right? And then, which you're finding yourself here, and then you find yourself. So it's a vicious pattern of eating up your investment returns. Now, this is a drastic example, making it seem like you're going to lose money doing this. But at the end of the day, the logic still applies. Every time you chase returns, if all you're doing is chasing better and better returns, and this is how you spend your time and energy, is getting frustrated with, your fund temporarily not, meeting your expectations, well, you're wasting that energy that could be better spent elsewhere in your financial planning. So what you ought to be doing is design and have an investment strategy. Trust that investment strategy, because whether you buy the winner or the loser, quote unquote, from the beginning, they end up at the exact same spot at the end of the day. If you give it 10, 20, 30 years of investments, you will end up at the same spot. So get an investment strategy, trust that strategy, and then start using all that energy and focus you have to figure out how you can contribute more to that investment strategy. So that's the message I wanted to drive home today. Stop chasing investment returns. More likely than not, you're not improving your returns. You might actually be causing yourself some harm. So hopefully this was helpful for you guys. Feel free to like and share this on social media. And if this was educational for you, imagine what a one-on-one session based on your unique circumstances would do to your finances. Until next time, cheers guys.